This is Total Growth Investing, where price growth is not enough. Dividend growth is not enough. We want to identify stocks, funds, and other investments that perform well in both of these measurements, because when we find them and buy them, we can beat the market over the long term. Right now, the number 3 stock on my Total Growth Investing ranked watch list is Walker Dunlop Incorporated. The symbol is WD. This is a company in the financial sector listed under thrifts and mortgage finance. They are primarily a multifamily and commercial real estate lender. Their stated goal is to become the largest commercial real estate lender in the United States. And with the growth that we have seen over the last 20 years, I think they're well on their way. Walker & Dunlop was started in 1937 by Oliver Walker and Laird Dunlop, the grandfather and great-uncle of the current CEO, William Mallory Walker. They were one of the first mortgage finance companies to become a Fannie Mae delegated underwriting and servicing lender in 1988, a housing and urban development lender since acquiring a HUD license in 2009, and a Freddie Mac Program Plus lender since 2009. William M. Walker took over the company from his father, Mallory Walker, who had worked within the company since 1963 and led the company from 1974 until William took over in 2005. He then retired from the board in December of 2010. William's mother, Diana Walker, was a well-known Time magazine photographer who covered the White House for 20 years, capturing a number of the more famous photographs of the Ford, Nixon, Reagan, Bush, and Clinton administrations. William Walker graduated from St. Lawrence University and then went to Harvard for his master's in business administration. Walker held a number of executive positions at firms across Europe, Latin America, and the United States. Resumes like this are a rabbit hole that I love to explore. Walker worked for Newbridge Capital, focusing on Latin America. Newbridge Capital was founded in 1994 as a subsidiary of Texas Pacific Group, now TPG Incorporated, which is a private equity firm focused on leveraged buyouts, growth capital, and venture capital. They started with a focus on Asia, and then expanded to Latin America in 1995, raising $450 million for 2 funds. They later launched another $50 million fund focused on technology ventures in Latin America in 2000. The company seems to have stopped doing much work in Latin America, focusing instead on Asia under their new branding as the TPG Asia Funds. Walker then became president of Teletech Europe from 1998 to 2003. Teletech, which renamed itself as T-Tech in 2018 to go along with their stock symbol, is a customer service and experience technology company headquartered in Englewood, Colorado, and founded in 1982. In 2002, which was Walker's last full year at the firm, the company had just crossed the $1 billion milestone in revenue. The European market was about 6.5% of that. In 2020, the revenue was about $2 billion, with Europe being about 4% of that. William Walker joined the board of his family's real estate company in 2000, and in September of 2003, he took on the position of Executive Vice President and Chief Operating Officer. Because he had not been in the business of real estate himself, but instead in international finance and management, he had a different skill set, and therefore different ideas on what his small family company could do to grow. Instead of just focusing on real estate, he brought his experience in mergers and acquisitions to the game, along with his Harvard Rolodex. He became company president in 2005, chief executive in 2007, and took over the position of chairman of the board from his father in 2010, He took the company public on December 20th, 2010, after a giant merger transaction that doubled the size of the company and set the corporation up for the next decade of expansion. The merger was a big deal. Credit Suisse wasn't sure what to do with Column Guaranteed Unit, which was the government lending arm of Column Financial Incorporated. William Walker's offer to merge 3 companies took about a year of negotiations. The third was Green Park Financial, and it was already the nation's largest dedicated multifamily lender and an affiliate of Walker Dunlop. The merger between these 3 combined a Freddie Mac and HUD license with a $4.9 billion servicing portfolio and became the 6th largest servicer for Fannie Mae and Freddie Mac loans and in the top 5 in originations of federal agency loans. It set Walker and Dunlop up for success, but they were just getting started. In 2012, they did it again. CW Capital, a Massachusetts limited liability company and a subsidiary of CW Financial, was one of the leading commercial real estate finance companies in the United States, with a primary focus on multifamily lending, originating and selling mortgage loans pursuant to the programs of Fannie Mae, Freddie Mac, Ginnie Mae, and HUD. CW Capital had approximately 180 employees in 14 offices nationwide. In June of 2012, Walker and Dunlop agreed to acquire CW Capital for $80 million in cash and 11.6 million shares of Walker and Dunlop. By the time the acquisition closed, the WD stock price had gone up from $12.7 per share to $13.03 per share, making the original expected acquisition cost of $220 million more like $231.1 million. Walker & Dunlop had 189 employees at the end of 2011. They doubled their number in a single day. And this acquisition also included a 50% ownership in ARA Finance LLC, providing a full range of finance services to clients. 2013 continued their growth, forming partnerships with Bridge Capital and CMBS. In 2014, Walker & Dunlop purchased Johnson Capital Group, Incorporated, for $23.5 million. Then, in 2015, they purchased Angler Financial Group for $13 million. This launched Walker & Dunlop into the multifamily investment sales market. In 2017, they formed a joint venture with an affiliate of Blackstone Mortgage Trust Incorporated to offer interim financing. In 2018, they acquired JCR Capital Investment Corporation, increasing their portfolio of offerings to institutional real estate investors and bringing their assets under management to over $1 billion. In December of 2021, Walker & Dunlop closed a $696 million deal to acquire tax credit syndicators and affordable housing developers Alliant Capital Ltd. and its affiliates Alliant Strategic Investments and ADC Communities. Then, in January of 2022, they inked a deal to acquire GeoPhy, a commercial real estate technology and data management company based in New York. Walker & Dunlop will pay $85 million in cash at the closing, in addition to $205 million of cash earnout potential. These kinds of mergers and deals play havoc with operating cash flow, which is why it can be seen bouncing around so much over the last decade. But if we put that aside, the coming years should show some remarkable success. Their growth can be seen in the following charts that I put together from the data in their annual reports. Their employees have grown from 157 in 2010 to over 1,000 in 2021. The annual report's not out yet, but that's what's expected. Total revenue topped out over $1 billion in 2020, with expenses and net income keeping pace. Their assets and liabilities can be seen on this chart, and I've added in the asset ratio. And their transaction volume is growing like crazy. Walker & Dunlop started paying a dividend in 2018. That's only 4 years ago. But their dividend started at 25 cents per quarter and increased each year. 30 cents in 2019, 36 in 2020, and 50 cents in 2021. They have announced their first dividend for 2022 will be 60 cents, payable on March 9th. That is a dividend growth of better than 38% just over the past 3 years, which alongside their incredible price growth and momentum over the last decades, brought them to the top of my ranking list. Another aspect of that is that Walker & Dunlop is actually a 10xer, with a total return over the last 10 years of 1,104.52%. With a payout ratio of only 8.74%, that helps to keep their score very high on the TGI list, and it gives them a lot of room to grow. Thanks for watching. If you liked this video, please hit the like button and subscribe to the channel. I update my ranking scores a bit every day and run the numbers to find the top 10 after each video that I do. Here's the latest update, and WD stayed at the top at number 4. As you can see, one stock rose a little bit higher. MVB Financial Corporation, MVBF. This is another company in the financial sector, a regional bank based in Fairmont, West Virginia. With a market cap of only $475 million, it'll be really interesting to learn about this company so I can present it in my next review video. I'll be doing that research over the next few weeks. Along with this YouTube channel, please also like the Facebook page. And if you'd like to talk about the TGI ranking system and the stocks at the top, please feel free to join the Facebook group. I do these videos for fun, not profit. The profit comes from making good choices in investing and watching the returns. Let's beat the market.